What's up, everybody? My name is Beau with Level Up Limited. I'm going to show you how to do a little bit of market research today using some online tools, breaking it down into percentages so that you can benchmark, assess your business, its current standing, and what you can do to improve. It'll highlight opportunities. First step is find a tool that will show you company information. So in this example, I'm going to analyze AppLovin Corporation out of Palo Alto, California. It connects businesses with AI technologies to help them be more efficient and leverage tools that will increase productivity, reduce costs, improve business. In Data Axle, you can find industry profile, give you the SIC code and the NAICS code, which is SIC codes are out of date. I don't know why we put that in there, but some coding systems still use it. NAICS has replaced that. It falls into the custom computer program services as a profile. In Data Axle gives you an idea of the business demographics. However, AppLovin is a publicly traded company. I don't know how accurate these informations are, but being a publicly traded company, you can view their SEC filings on Edgar, which is actually what we'll do to benchmark. Because that, then you come here, AppLovin Corporation, take their whatever you want to look at, but I would suggest looking at their annual report from the most recent year. This was distributed February 27th, 2025 for fiscal year ending 2024. And in their annual report, the financial statements are usually right in the middle of the document. Looks like it'll be item 8. The income statement, cash flow statement, balance sheet, are what we'll be interested in. Those will give us the best idea of to benchmark against any other company. And what you can do is you pick a company in your industry that is arguably a larger organization. Unless your firm happens to be publicly traded, then you're probably not watching this video. You'd likely have a financial team like Goldman and Sachs that took you public, and accountants that maintain these financial statements that are required. But if you're not that, then you can take those and benchmark against them for your organization. What I would do is there should be either a CVS or this one, CVS or an Excel sheet. You can go to sections, then you want balance sheet, statement operations will Actually, the statement of operations might be your best look at how they are operating their business. And the idea is you see where they're investing dollars. You can see where they're represented in the market. Cash flows will show you how they're doing in cash, and then you compare it against your own. You take your QuickBooks. QuickBooks has your cash flow. QuickBooks has your balance sheet, and you measure it against this. There, that's the balance sheet that I was looking for. So fiscal year 23, fiscal year 24, assets, increased 241,000, and liabilities increased 600,000 total liabilities. But you can see where they spent the money. But what I would suggest you do is take a little copy paste here. Open yourself we'll use Sheets for this example, just because it's here. Paste it in Sheets. And you can do this for trends over time. You can see the market is growing, or the market is taking to AppLovin's product offering because cash and cash equivalents was increased by a significant amount. And I would guess if we look at their quarterly statements, there would be a correlation between what they're spending in either short-term debt or that actually went down. Where did it go up? Total liabilities went up by 600. The biggest jump was accounts payable. So they bought a bunch of stuff on credit. So it wasn't buildings, because current liabilities is everything that is due within a year. Total current is what had an increase. Well, actually, here, long-term debt. They invested in something. Property, plant, and equipment is typically what will fall under there. So whatever it is, they invested in property, plant, and equipment. But what you can do is take this number here and you benchmark it against your organization. So you take this number divided by this bottom number here, total assets. So that'll give you the percentage that cash is of your total assets. And if you hit F4, it will lock in the cell. In this case, E21 will be locked. That way I can just drag this down and it will measure this against this on every cell and hold E21. Or not. I don't understand. I'm going to do this one. And it's exactly what we want. Well, so whoever knows Excel better than I do. Well, here's the deal. Maybe it's not how Google Sheets works. I don't. not as familiar with Google Sheets. Right, it says 156. That's exactly what we want. Divided by what? I don't understand. That's not the value that's in that cell. That's the result? Oh, okay. Great. Look, suggested. Yeah, that's great. Come on. Do it again. So this B equals this divided by this. Want to give you the auto suggestion again because it's exactly what I wanted. Now it works. And then just convert these to percentages. Now, when you look at your financial statement, you can see where you compare to this organization. That'll give you an idea of how this organization is operating relative to yours. Now, there are some caveats to that. This is a ballpark thing. Your scale of economies is not going to be as great as a balance sheet that has 5,869,000. I imagine these are thousands. So $5 billion in assets. If you're running a $5 billion asset balance, strong. Not only is it a $5 million balance, it's $5 million positive balance. So your quick ratio, well, this isn't your quick ratio. Quick ratio would be against your current. So current liability, total current. Where is total current? Total current liability. That's what we want. This. Right. 0.18 is their current ratio, which means they have their, actually it should be this way, which is a strong balance sheet, especially for a technology company. So they have 5 times the assets to cover current liabilities. So if they liquidated, they could pay their current liabilities 5 times over. And then this would be, I think actually that was right, but this 1.22. They could pay off their total liabilities. They have a positive balance sheet. So their business is built on equity. And the remainder becomes shareholder equity right here. So that's the difference. And then it balances out to 5,869. The stockholder equity went down. They had a rough year, so retained earnings, so significant increase. So the difference in retained earnings, which is after expenses are paid, gives you a better idea. Like this is what, like if you own a share of stock and say it's got a outstanding shares of, how do you find out finance? Yeah, I don't even know what the kicker is. but you take their outstanding shares, market cap intraday. I mean, really, you can just take base. By stock price to give you the number of outstanding shares. I'm going to figure out what 8E493, so 84 billion 973 million 0, 0, 0, 0. I think that's probably right. This the way around. So that is how many shares outstanding there are. So there was a dollar, or let's see how much profit per. So the retained earnings was 500,099. This. So 0.01762 is what they returned to the shareholders in profit last year. But you can take these numbers, measure it against your company, and see where you stand. Or pick a smaller company. Like what it'll say in their annual report sometimes. Where's so this is their direct competitors is the Apple Store and the Google Play Store and Facebook Store. Some pretty big players in the game there. So if you have any questions, drop them in the comments and I'll do another video to cover those. Give you an idea of how to align your business with benchmarks so you can set KPIs that you can track and improve performance on. If you want to look at an organization within your industry, also let me know. There's a couple other resources we can dig into. Thanks.